السلام عليكم ورحمة الله تعالى وبركاته. بسم الله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 29th of September 2024. I'll be doing the weekly market review. Starting with DXY here, I'm viewing the weekly time frame chart. As you can see, price is just walking inside the sell side liquidity that is shown right there. So from here, as I've mentioned, we were expecting some kind of consolidation before either running up higher to fill some of that fair gap and take out this buy side liquidity, or run down lower towards this sell side liquidity right there. So going to the daily time frame chart, you can see it's pretty much consolidating, taking pretty much down the sell side liquidity. Now I'm expecting it to just take out these two relative equal highs that are up there here, and then it could reverse or just continue running up higher. So in consolidation, we're just sitting on our hands and just demanding more intel from price or from the markets. So that is going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, price has formed a fair value gap between this candle's high and this candle's low. This fair value gap is classified as a busy buy side imbalance, sell side inefficiency. So it's inefficient with the sell side delivery. So we're expecting some sell side delivery into that into that fair value gap, that to make the markets, to make the chart balanced out, it has to deliver sell side. So we also have here a bullish order block that price can react to, and we can continue running up higher. But I want to draw your attention to next market that we're going to be reviewing is NQ, as NQ didn't take out buy side liquidity, but ES did. So this could be a sign of an SMT. This can this can be a sign that the market would want to reverse and start trading down lower, but we're not anticipating it. We're demanding more intel to see if price really wants to drop down lower and start seeking sell side liquidity or start a sell program. So going to the daily time frame chart, we have a volume imbalance here. Actually, this is a liquidity void. There's no candles, no wicks between this high and this low. So we're expecting some kind of a retracement towards that liquidity void to be filled out. We have also a sell liquidity here. So a retracement into that fair value gap, that is the most expected move to me next week. And we also have next week NFP, non-farm payroll, on Friday, 8 a.m., 8:30 a.m. in the morning. So you would have to be extremely cautious when going into the markets next week, and you would ideally want to stop trading by Wednesday noon. And because beyond that, you're gonna be witnessing a lot of manipulation in the markets. So you don't want to be in these kind of environments when you're trading. So anyway, that's going to be pretty much it for ES. I'm expecting a retracement here towards this very gap right there. Going to NQ, here I'm viewing the continuous contract and I'm also viewing the weekly time frame chart. As you can see, NQ didn't take out this buy side right there, that is shown here, but it traded above that fair value gap and it closed in it. So now we've formed a fair value gap here, busy also. So now price can retrace towards that busy, walk inside that busy, take some orders, and then run up higher towards the buy side liquidity. We've seen a reaction from this rejection block right there, and we run it up higher, took out the buy side liquidity, fair value gap. Now my best thing to look at, or the most reasonable direction or drawn liquidity for me to look at right now, is this fair value gap. And if price didn't trade towards that fair value gap, I want to see price trade to the constant encroachment of this premium wick and trade above it and close above it on daily basis. Going to the daily time frame chart. Now the constant encroachment would be somewhere around here. You can go to your chart and you can look it up. It's just above that fair value gap. So closing above this level It means like we're closing above this fair value gap that can be treated as an inversion fair value gap later on, and we're trading and closing above the constant of the weekly premium wick, which is shown right there, this premium wick. So, but before that, we have this fair value gap that I've mentioned. Now, if price wants to be animated below this fair value gap, we have this liquidity void right there. Now, these liquidity voids are shown because I'm viewing the continuous contract on the continuous contract here. But if you view the this month's contract, which is December's contract, you wouldn't see this gap here, the liquidity void, you wouldn't see it. So this is why you need to be aware of all the other markets, the continuous contract or this month's contract. We also I want to draw your attention towards this liquidity void also here that is also inside this fair value gap. So price, there's a lot of influence in this area that price can retrace, and these are not, it's not a zone. These are very specific levels in the markets. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, I mentioned few weeks ago, and even last week, you can go and check out last week's review. I mentioned that I want to price trade and pretty much attack this buy side liquidity, and we in fact seen price did that this week. Now there's not much any inefficiencies in the markets here in this swing. You can see that price is just balancing out everything. We traded down lower to this fair value gap. We balanced out this fair value gap and we traded up higher. Now, the only thing that I'm looking at right now is this buy side liquidity. That is what I'm aiming at. That's my drawn liquidity. Now, price can just from here just reverse and crash down low towards this relative equal lows. It's absolutely normal for it to do. But what is my highest probability direction that I'm aiming at? It is this buy side liquidity right there. This is what I'm aiming at. So if price wants to retrace, I'm expect I'm accepting any retracement towards anywhere towards that consequence of this discount wick, but beyond it, I don't want to see price close beyond that level. It can wick, it can pretty much damage people who are holding their positions and having their stop loss below this level, but I don't want to see price close below it. So going to the daily time frame chart. Now this area would be somewhere around here, right there. Somewhere it's just I'm eyeballing it. It's not 100%, but you can go to your charts and you can confirm it. As you can see, price taking out the buy side liquidity right there. Pretty much you can see that everything is pretty much efficient. Now price can do the damage by reaching towards this fair value gap. I will be honest with you, but you can see how price touched the fair value gap right there and then it up higher. Now going to the next week, price might take out these inside liquidity right there, these lows, reach towards this fair value gap without closing anywhere near it and just retrace and trade up higher towards the buy side liquidity right there. So that's how I'm looking at it for next week. Now I really want to emphasize that we have NFP next week. So anything is expected from the markets. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, price is slowly reaching towards that fair value gap. It's just fell about a few pips short of it, but anyway, like we're still aiming at that. As of price reaching there, we have formed a fair value gap right there, also a BC, buy side imbalance, sell side inefficiency. So price can retrace, walk inside this fair value gap before running up higher towards this fair value gap. And you can see also we have a mitigation block here. So we can see some kind of a reaction, we can see some kind of a consolidation, or price can just disrespect this mitigation block and run up higher towards liquidity, as we have here relative equal highs right there. So going to the daily time frame chart, this is the weekly fair value gap that I've shown here on the weekly time frame chart. On the daily time frame chart, you can see this is the weekly favorite gap or the weekly SE, price might retrace down lower. We have bullish order block. Price can walk inside the bullish order block and then run up higher towards the price side. You can see how price fell short of that favorite gap, just a few pips right there. Now, what is it doing here? What is the market doing here at the moment? By just falling short of that favorite gap with a few pips. Now, a lot of people in the retail realm will be expecting this as a point or as a level of resistance, and they would want to trust it when it retraces. Now, if I was the one who's controlling the markets, now obviously I'm not the one who's controlling the markets, but I have some fingerprints, I have some signature in price that once I see those patterns, once I see those signatures, those footprints, I'll be able to pretty much discern and know for not 100% a surety, but anywhere with a high probability that that's going to be the direction. Now, if I'm going to move the markets, now people are trusting this as resistance, as you can see. Now, I'll drop this down lower towards the weekly favorite gap. Now, maybe work a little bit inside this favorite gap, take out this inside liquidity. A lot of retail traders are trusting this as a point or a level of resistance, and they will be setting or trailing their stop loss just at this level or just above it, which above it we have this favorite gap that I'm aiming at. So once we drop down lower, the drop down lower is the manipulation, and there will be accumulation here. There's going to be an accumulation here. People or smart money are going to be accumulating from this bullish order block, and then we rally up higher, take out the buy side liquidity first, and any orders that are resting at that buy side liquidity, and just above it the fair gap, which also there's going to be orders resting or residing at that area. So that's how I'm imagining it. That's how I'm picturing it in my mind. Now price can just run up higher on Monday, and that's going to be too much it. Now what I'm expecting, because NFT is next week, a drop down lower, or it can just run up higher on Monday or Tuesday, and on NFP it can just attack lower prices towards that bullish order block, or vice versa. It can Monday, Tuesday, Wednesday, it can drop down lower towards that bullish order block, and on Friday it can just rally up higher, take out the buy side liquidity, reach to the Fibonacci gap. These are the two scenarios that I'm expecting here, but it can do any of them. So that's going to be pretty much it for this weekly review. I really hope you found this one insightful. You can join our Discord 2 minute server to pretty much be updated and updated on day-to-day updates. Um, ask questions, join, hang out with us. Don't forget to like, subscribe, and comment anything that you would want to see on this channel. I really need your recommendations on what you want to see on this channel. So until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.